This is literally it, the most important foundational concept that exists in trading. I took years, literally years, I don't know why, of learning this. As soon as I did, trading became a whole different ballgame. It doesn't matter if you're swinging, scalping, if you're an investor, if you're an option seller, option buyer, it does not matter. Futures, it doesn't matter. Everything boils down, literally. I'm not exaggerating at all, guys. Everything comes down to risk reward. I'm going to show you in several examples, several scenarios of how to apply this, how to use this in different trading platforms. I'm going to use two, and then you will finally understand risk reward and why we make such a big deal out of this. So let's dive into the chart and let's start learning risk reward. Here we are on Qs on the 10-minute time frame. Now, I will discuss so many concepts in this video. I want to drive the point across. I always ask for feedback, so you guys leave me the feedback at the end of the video if I was successful in doing so. There is nothing more important than risk reward, whether you're a buyer, a seller, if you're a swing trader, if you're a scalper, it doesn't matter. When we're looking at the chart, I often know if you are a novice trader or if you're new at this, when you come to the market with a mentality of up or down, right? Just long or short. I know that that is the general consensus, and sometimes we're abstracted away from the fact. What I mean is that we are not considering risk reward on every decision we make. Some of us are not even using a risk reward calculator. Now, I'm going to show you one here, as I stated in the beginning. I'm going to show you on TrendSpider and also on TradingView. It is a very simple calculation. When we are using the risk reward calculator, we generally recommend that you use the computation of 2 to 1. Why do we do that? In the calculator in a couple minutes, you'll see as to why. Most of us are going to be fixated on a win rate, right? How many of us have bought a system where they promise 90, 98% win rate, and then we go off that? That doesn't matter at all. Win rate literally doesn't matter. What matters is risk reward. If you have extremely good risk reward where you're using 5 to 1, 6 to 1, 7 to 1, you don't have to be correct, not even 80% of the time. You can literally be wrong most of the time. When I'm going to use the risk reward calculator for you guys to have a more definitive vantage point from where you are sitting on your computer at home or whether you're watching me on the train station, when you're looking at this, when you're looking at any chart, the decision will be made off of your indicators. Is the indicator telling you to fire long or to fire short? And some of you are thinking, because I get this, I train a lot of traders. Sometimes the indicator is wrong, or sometimes I don't interpret the indicator the right way. That's where risk reward becomes the most foundational concept. When you develop a little bit more of experience where you have a setup or you have a high probability of a risk reward being more so in your favor, that's generally the direction of the trade you need to take. I will repeat this concept several times. On the 30-minute time frame, if you understand cyclicalities in markets, you have to have that fundamental belief. If you don't believe that, then this might be a little bit wonky and a little bit weird to you. But the undulations in the market, they're basically waves, right? Those waves are the things that we're trying to time. As we are coming into what I call strong points of violent change of direction, this is just a lot of words to say supply or demand. As we're coming into some of these levels, they're all completely subjective because we don't actually know. We really don't know if it's going to be trading down here. It's called anchoring bias. We have a bias that if we trade back down to 521.37, that there's a likelihood that buyers will start showing up once again. Just be careful with that. Anchoring bias can get you into big trouble. So let's just say I'm going to use, boom, right there, that as a support level. I'm going to use that level because if I'm using my risk reward calculator, this is the difference. I'm going to plot it on here and I'm going to set my stop loss. Let's just say I'm going to set it at 3 to 1. If I do that at 3 to 1, then look how much overhead it is that I can see on the trade. Does this make sense from a swinging perspective? Also, as a scalper, you're going to use the same concept on the 5-minute or the 3-minute time frame. But if you are going a little bit further out, 30, 1 hour, 2 hour time frame, just check out that risk reward. It's 9 to 1, 10 to 1. Sometimes you can go even better. This is what swing trading and this is what momentum trading is all about. If I am invalidated, remember when we talked about the 3 pillars in the intro video, you need to be able to let go of the theory or the thesis or the trade with pillar number 3. And then number 3 is going to be risk reward. That brings everything together. That is the execution pillar. That brings all 3 into a nice, neat little system. That's what you want as a trader. I'm going to set and predetermine that level, not based off my opinion. I cannot express this enough. If you can understand this, then you will never ask the question ever again about where to set the stop loss. The stop loss is based off if you are at least adhering to a 2-to-1. Give me 1 second. I'm going to adjust this. It's if you are at least adhering to a 2-to-1, then you know where to set your stop loss. If you do not see at least a 2 there, then your stop loss is way too low. Okay, your risk reward is terrible. That's where you need to adjust it up. If you can get that number at least to 2-to-1 is what we generally recommend the baseline should be, that is your stop loss. Now, what if you're being stopped out all the time? Then your problem is your entry. Then you need to learn how to read the indicators a little bit better. Then we can actually pinpoint exactly where the problem is, and we can fix some of the trading problems that you are experiencing. So let's go back here to the 10-minute time frame. We're looking at this, and in my scenario here, I have a risk reward there to the upside. If I had taken the trade here, I at least have a 2-to-1. So right now, I can make the decision, this is a little bit more advanced, but to move up the stop loss or trail the stop loss. I'm already in a winning trade. What if I wanted to wait on the position? What if, let's just say, I don't want to trade the 5-minute or the 10-minute, and I strictly want to stay off the 30-minute time frame? Then you're going to wait for what I call desirable pockets. How do you know it's desirable? It's only a matter of you looking at the risk reward and seeing if the number is greater than 2-to-1. If you have a short biased opinion, and it's the most common thing in the world, right? We love trading short bias because it moves very quickly. If we have the short bias opinion, then you better make sure that the risk reward makes sense. How do I know that this risk reward makes sense? Well, let's look at a strong pivot of direction. You can use pre-market or you can use yesterday's high or lows. That's perfectly fine. Whatever way that you determine how or where that potential point can be is perfectly fine with us. You will see in other videos where we're using technical analysis, we use something called voodoo lines, and we also use accumulation distribution to make these decisions. But let's check that out. It's at least 3.8-to-1. What does that mean? We're over the threshold, we're over the baseline of 2-to-1, and we don't have to worry about it. If you are stopped out on the trade, you take the small loss and you have a nice day. That is what trading is. This here, just adhering to this and not deviating from this whatsoever, you will fix most of the problems that you have as a trader. Let's jump in here on the 10-minute time frame and let's look at this under a magnifying glass. Let's just say I want to take it to there because we have, let's say, a pivot of direction. Is my risk reward even worth it for me to jump into the trade? Notice my wording here. Is it even worth it? I think about this all the time, been doing this for over 10 years. Now I think to myself, is it even worth it? Is it worth it me taking a short position here, independent of what my bias is, if the risk reward is in my favor? Why am I driving this point across so much? Let's go to the risk reward calculator. Give me 1 second to set that up. We're going to go here to the TrendSpider risk reward calculator, and let's just use very round numbers. If I have an entry price at $10 and then I want a profit target of at least 12, let's check that out. And my stop loss is 1. I want to make sure that you understand this. This is a 2-to-1 risk reward. Why? Because I'm risking $1 to try to make $2. We're going to calculate this. This is usually where I have some disbelief. So even with this video, even though it's pre-recorded, I want to make sure that you understand this. Look at the required win rate for consistent profitability. Look what that number and percentage is. You will generally learn from somewhere. I don't know why we've picked up these bad habits, but you will generally learn that your win rate needs to be above 70, 80, or maybe even 90%. That is not true whatsoever. It is literally not true.
Not true. Of course not.
If you like, if I'm not able to convey this message clearly enough, play with your own risk calculator and see exactly, just using the 2-to-1 risk reward principle, what your profitability score needs to be. If you can just get better than 37% of you being correct, you're already profitable. So what if we take this to a 3-to-1? All I have to do is adjust here. I'm going to put a 3 as opposed to a 2. And what does my win rate need to be now? It needs to be just a little bit over 26%. Some of you are trading risk rewards, and we have many of those people that I coach myself. You're going for a 5-to-1 or a 4-to-1. These are very common risk rewards that we generally want to attack. If I'm going for a 5-to-1 risk reward, you just need to be correct 20% of the time. This takes the onus off of you being correct all the time, or even you selecting the bias so much more off your back. All right, let's go over more examples. Now let's use SPY, and I want to drive the point across even more, because if you get this, guys, literally, if you get this, you get everything else. It looks like we're maybe getting a trigger here to the downside. My 8 and my 21 might be pointing lower. Be careful with this. I don't have a bias to the downside. I don't. 5 minute. Let's do the 5 minute. I don't have a bias to the downside. What I'm going to do is I'm going to use my risk reward calculator, and then I'm going to see if I take this entry here, independent of where your trigger is, because all your triggers are going to be different. I want to take it to at least the lowest point, or at least here, and make sure that that is 2-to-1. If you get stopped out on the trade, and let's say you're taking 2-3 trades a day, or maybe you might be taking more, as long as you are adhering to this, you will be okay. You literally will be okay. You do not have to be right, not even 50% of the time. Let's do this on the higher time frames. That looks like a nice gap to the downside. Let me remove the indicator so I can simplify the visuals. Let's get here, risk reward. Let's take that, and let's take the entry here. Let's flop that, and let's just say I want to take this back down to approximately there. And then my stop loss is 605.15. What is that risk reward? It's 5-to-1. Okay, 5-to-1 means that I just need to be right 20% of the time. Just imagine this with the law of large numbers. The more trades that you're taking, the less it really matters about the direction. You will find, and I'm going to infer this, you will find that the better you are at reading the technicals, then the more profitable you will be. It's not about you being right 100% of the time. It really is not. It's about you getting very good at this. Now let's do this on TV. Let's go here to SPY. It's the same thing. I'm actually going to take off the voodoo lines because it is a lot of information to go over just now. I'm going to remove all the indicators, and we're just going to strictly focus on the risk reward. Let's go off of the 15-minute time frame, and let's use the calculator here. This tool, if you look, you have the long bias and then the short bias that you can put up. So I'm going to put on a short bias trade just because we have a gap to the downside, and we're going to calculate the risk reward. A lot of you are not using this tool. A lot of you don't even know this tool exists. But what do we have? I have, let's just say I want to take that to there, and then I want to set my stop loss at about there. So long, again, I've said this a million times, so long as that the risk reward is above 2-to-1, you'll be fine. Everything else builds on top of this. Everything that we will discuss, talking about supply and demand, talking about moving averages, talking about indicators, talking about the RAF, whatever indicator that I use, this needs to come first. So again, the tool, just in case you missed it, is right here, right? Short position, long position, you're going to click the little arrow here, and then you have different places that you can anchor. You can do different forecasting. We don't need to get that complicated. You just need to focus on short or long bias. If I want to do a long bias position, then I'm going to delete this. I'm going to come here. And then what I'm going to do is I'm just going to set, let's just say, for example, I want to take that, and then I'm going to move this to a more realistic level. Let's just say high of day. And what is my risk reward there, everyone? It's 3-to-1. So if I do have the long bias, just make sure that your invalidation area, remember pillar number 2, is set even before you take the trade. Okay? Even before you take the trade. Now that was a lot of information, and I totally understand being overwhelmed. I know I was there on the back burner of this because I knew this on an intellectual plane, but I really didn't apply it. The only thing that I would recommend is if you do use the tool, make sure that you model it on every trade that you're going to take from here on out. Do it 10 times, do it 50 times, do it 100 times. I still use it. So I'm literally putting this on almost every chart that I ever want to take a trade on. You do that, then you are one step closer to you becoming a more disciplined trader and one that is very dangerous. Remember, the difference between you gambling and you becoming a trader is the execution. This is the foundation to all of that.